It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Annabelle Droulers with David Ingles.
Happy Friday and good morning to all of you. We're counting down to the open markets in Greater China. Let's get to your top stories today. President Trump is expected to announce finally his Fed chair nominee on Friday, saying his pick will not be too surprising.
Asian stocks and U.S. futures under pressure as traders digest big tech earnings, with Apple's warning about rising costs weighing on sentiment.
Now, the company, however, delivering record quarterly sales driven by strong iPhone demand, services growth, and a rebound in the Chinese market.
Also ahead, President Xi hails ties with the UK during Keir Starmer's visit and pledges to grant British tourists visa-free entry.
And a Bloomberg scoop, Blackstone is in advanced talks to become the single largest shareholder of struggling Hong Kong developer New World. Good morning. Happy Friday. Welcome to the show. Lots to discuss as we kick off the final one of the week, final show of the week. So a couple of things on deck. Of course, Donald Trump was speaking about an hour or so back. He touched on many things, which is not surprising. But I think maybe of immediate consequence to the markets is Iran. He's sending a group there, he says. And, of course, as it pertains to the Fed pick, we'll find out very soon, I think.
His nominee. So he's saying he's going to announce that Friday morning. That's U.S. time, of course, our Friday evening here in Asia. That's right. Yeah, I've got the times.
Yes.
Right.
Yes.
An early test for me. But Kevin Warsh is certainly the one that could be the pick. And I think it's a really interesting one because he's someone who has in some ways a CV that resembles Jay Powell to an extent. I mean, they were both lawyers that worked on Wall Street, both worked as Fed governors as well. So in some senses there are similarities. But at the same time, it's interesting, in his time as Fed governor, he was actually someone who leaned more hawkish and showed really little tolerance for inflation. Yeah,
I mean, the only clue we got from the president, actually, I wouldn't even call it a clue, it's more a description, doesn't really answer the question. I'm thinking about it back. It's known to everybody in the financial world, is how he's described it too. So anyway, we'll see what the name looks like, and of course that's the nominee because it still has to go through, of course, the process of in terms of being approved. The other story we're tracking today, obviously tech earnings, right? We had this whole flurry yesterday, this time, and of course overnight it was really Apple and what they said about the iPhone record sales there. The Chinese market coming back, I think, the first time in 3 years.
Yeah, really strong for the Chinese market. I think it's interesting as well. Citi has downgraded their forecast or price target on Xiaomi stocks as well, and that's partly down to that slowing smartphone. But Apple actually performed well, and it is really coming down to its iPhone releases. It seems to have captivated a lot of attention from consumers and really good holiday spending. Concerns about the memory chip slump, but didn't really see it in the current quarter. They're saying you're more going to see that actually moving into 2026.
Okay, yeah, I think it underscores too, it's been very difficult to impress this market, right? Particularly for these large caps. It's not... We haven't seen big declines across all. We've seen declines across most. And I think the reason I bring that up, it's the final trading session of the month. And we are set for a third straight monthly underperformance of the S&P equal weight relative to the S&P, the regular index, of course, which underscores not so much the rotation, but it's the broadening out of the rally. And, of course, we're still trading at fairly high levels in price. That is also just to say, silently, two other things. Obviously, silver has not been too silent. Crude prices have crept up.
Yeah.
Right? 5 or 6 straight weeks. And, of course, also Hong Kong, actually. The Hang Seng Index is now on the cusp of 28,000 for the first time since 2021. So we'll see how everything plays out across these markets. As we get into Friday, the state of play across equity markets is this. NASDAQ futures are off 0.4%. We have Taiwan coming online, reflecting perhaps what Bell was talking about there on the Xiaomi and Apple overlaid as 0.6% to the downside. Kospi, though, I mean, what's new? This has always been mostly green so far. I would say mostly daily for the last month and a half here. Let's have a look at the dollar and how we're tracking there. We are set for the second straight weekly drop. Not just any weekly drop, of course. Steep weekly drops, plural, there on the U.S. dollar. We'll unpack, of course, the trip, Keir Starmer, of course, in China and sort of what's that's unlocked so far. We talked about the commodity story, so Brent, 70 for the first time. in several months. You have copper. We touched 14,000. That was the big story. We'll look at the copper contract, obviously, when things get underway here in Greater China in a couple of minutes. Gold and silver on your screens. A50 futures coming up very, very shortly. There we go. The oil contract is up 3%. Dollar in China 6.95. And of course, among many other things, I think in terms of earnings, we have Hang Lung reporting earnings today. But yes, it's all about big tech.
It is all about big tech, and it's all about Apple in the session today as well, because we had those earnings coming out in the last couple of hours. As you said, it was an upbeat forecast, of course, concerns around memory chip prices. What does that mean for margins for the business moving forward? But just taking a look at some of the supplies in the region, and, well, no surprise really is seeing Samsung, of course, after those blockbuster numbers yesterday, and again, a key beneficiary out of those rising memory chip prices, but otherwise a little bit under pressure this morning. Let's bring in our Managing Editor for Consumer Tech, Mark Gurman, joining us this morning. So, Mark, of course, you know Apple better than anyone else at Bloomberg. So what was the most important takeaway from you from the numbers?
Biggest takeaway is they absolutely killed it, okay? $144 billion quarter. It's unbelievable. It's their first $25 billion quarter in Greater China. In 4 years. The iPhone number hit 85 billion. Services topped 30 billion. It's quite remarkable. Services were flat compared to the Wall Street estimate, but still that was pretty damn good. The Mac and wearables, home and accessories both saw some declines, but you know what? The iPhone number was so strong, really doesn't matter. The China number was so strong, it really doesn't matter. What this means, they now have some air cover, right? They have support from Wall Street because of these financials to get a little bit more time to get their act together on AI. I still think Apple's facing an existential AI crisis. They're not an AI company. They're not run by AI people. They're still the worst in the industry when it comes to AI. But if you're selling iPhones like this, at least for now, it doesn't matter. But that doesn't mean it's not going to matter and matter soon. So they shouldn't be resting on their laurels here, and I don't think they are.
Mark, I mean, give us an update, too, if you could, on overseas markets and whether, to just borrow the concept you just mentioned there, you know, other markets will also help, give them more time as they figure out the AI story, Mark.
China's great. India's great. Korea seems great. Brazil, they shouted out even in terms of Mac sales. They did decent in Europe. But yeah, they really need to figure out this AI situation. You know, Tim Cook has been an executor of, the Steve Jobs roadmap. For the few years after Steve Jobs passed away. He's able to widen Apple's product portfolio, but there's really been nothing in terms of major new things concocted under Cook that have become a success. The car never came to market, the TV set never came to market, the Vision Pro is a complete failure. They're going to need to come up with some new things, and especially built around an AI ecosystem. They have not proved an ability to do so, but we'll see what happens in the next couple of years. The roadmap is quite strong. The other question long-term is on succession, right? Will Tim Cook have the right person to replace him at some point? I still think it'll be the hardware chief. But these are all questions that are going to need to get answered. But fortunately for them, they just bought themselves a lot more time.
Mark, really great insights there. That was our reporter there for Apple, Mark Gurman, in Los Angeles. And joining us now is Herald van der Linde. He's head of Asia Pacific Equity Strategy at HSBC. And great to see you again.
Good morning.
Start of the year. So let's just kick off on that tech story. I know that this is the year that you're going to be looking beyond the AI rally, but at least in the near term.
At the moment, no need for that.
Yeah, it's hard to ignore.
It's hard to ignore. No, absolutely. So this is the only story in the region. Maybe China is a story as well, but it's basically the only story. We said at the beginning of the year there will be, in this year, we're going to also have to look beyond, because India is maybe recovering and maybe something in Asia, but that's not really happening at the moment. So the story remains a Northeast Asian sort of a North Asia story, right? Korea, Taiwan, shortages in tech, stocks very strong, earnings upgrades in these markets, absolutely. That's
our starting point in Korea, just to zero in on that market. Yeah. Value, I mean, the discounts clearly disappeared, the Korea discount. What does the earnings story look like? Do you think it will justify a further re-rating?
No, the earnings story is very strong. I mean, look at how Korea has performed. If you look at the valuations of the market, it's moved up a little bit, not so much, because the earnings have gone up so much as well. And what we now see in terms of positioning is that people have already got a lot of exposure in Taiwan. They can't really buy that much more, because you can't have an Asian portfolio with only one stock in it in Taiwan. So exactly. So actually, as that market continues to perform, you see that people actually have to sell. So they try to build that exposure somewhere else, and that's helping Korea as well. Right. So you see them rotating into the Samsung, Hynix, and these stocks, of course. And there is still room for that to grow. Global funds are coming in as well. You just mentioned earlier on, there's a bit of rotation in the US market. So you see that they're looking for kind of AI plays outside of the US now, and then Korea is your obvious choice then. Yep.
So you think this is the year that Korea really just continues to be the standout in the Asian region, or are you looking at other markets as well? Of course, there's Japan, or there's Taiwan, Hong Kong. Which one do you think is going to be the biggest beneficiary, I guess, of that rotation away?
If there's a rotation, I think there's some interesting things happening in China. There are interesting things happening in India, but it's slow and it's not so visible yet. So that might well be a story that just takes time before the earnings are recovering there. There's a bit more stimulus has taken place. So it looks like the earnings story is picking up in India, but it's very slow. So at the moment, it's not something that gets a lot of attention. So that might be something that happens in the next quarter or so. But we also see money coming back into China, and that's interesting. And this is not mainland Chinese money. That was the main driver for last year. But we actually see money coming from Europe and also from the US. And in particular from the US, that's not something we've seen over the last couple of years. But they're starting to go back into Chinese stocks as well.
Do you get a sense that will continue? Because that was for many years potentially the incremental buyer of this Chinese market. We're underweight China. We've been massively still underweight when you look at the positioning, right? So I want to get a sense based on your conversations.
I mean, you're absolutely right. 2 years ago, I think we actually spoke about this once. Everybody said, "Oh, it's about Asia ex-China or emerging markets ex-China." That story is gone. A lot of U.S. funds said, "No, we're not going to buy China. There's no interest in this whatsoever. Difficult to sell." But now we have a different dynamic. We have a weaker dollar, so you want non-U.S. assets. Europe is already. They went last year into Europe. Right. Now they're looking somewhere else. Emerging markets shows up. And then you need to find markets where there's a good growth story. We just spoke about Korea. But in China, things are picking up as well. Look at the Apple results, right? That gives another confidence. Hey, there is something going on there. The market has performed pretty well last year. So I think the interest is starting to come back in.
Do you think the formula for China this year will be what worked last year, which is, your platform companies, some of the financials on income and dividends, and I think materials did quite well? Or is there a cyclical story, a rebound that we might be sleeping on?
I think there will be a bit of a cyclical story. I think. Okay. So the interest is, to a large extent, has been in dividend-yielding stock, sort of safe investments, and this is mainland Chinese buying Chinese stocks initially in Hong Kong, then they went to the Asia market later on, and they bought Bank of China and these sort of companies. They gave you a good yield, very safe sort of investment. What we now see is interest going into other sectors. So AI, China AI, biotech is coming up quite often. And then you have these other sort of sectors that do pretty well. Power equipment is doing very well because you're building out all sorts of networks in China, so you need that. So there are these industries where there is no oversupply, where things are happening. And this is where the focus is shifting in that direction as well.
The IPO pipeline, though, in Hong Kong is still very robust coming into...
Robust is understatement. Yes, it's very strong.
Well, it's very strong.
Yeah.
And I'm wondering if you think that there's any concerns about liquidity being drained from the secondary market on that basis.
Yeah, we have, last time we looked, 360 IPOs in the pipeline. So that's a lot. And some of them are big, some of them are smaller companies as well. There's a lot of these AI companies that need capital, so they're listing. There is a lot of, as I said, there's the Chinese local money, mainland Chinese money coming into Hong Kong. You now have foreign money coming there as well. So there's a lot of liquidity around. So I'm not worried that will drain money out of the secondary market. It might happen from 1 week to another if there's a real big IPO, but not structurally so, at least not at the moment. If that would happen, though, let's say it's difficult to sell your IPO, you got to lower your price, then you see that 360 number probably goes lower. Because then some companies might say, let's wait a little until the market's a bit stronger. So that's a moving target as well. But I'm not overly worried. Liquidity is really good in Hong Kong.
Key to the liquidity issue formula will be the Fed. We heard from the U.S. president earlier. I want to play it out for our viewers, and we'll talk about it soon. Let's play it out, guys, please.
What day will you be announcing your Fed chair pick next week?
Tomorrow morning.
Tomorrow morning.
Oh.
What day will you be announcing your Fed chair pick next week?
Tomorrow morning.
Tomorrow morning.
Oh.
And do you know?
I'd rather say it tomorrow, but just an outstanding person and a person that won't be too surprising to people. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so.
So it's someone who was on your short list, sir?
On my reasonably short list, yeah.
So, Herald, Kevin Hassett, Chris Waller, Kevin Warsh, Rick Ryder. Does it matter who among the four eventually gets?
Yeah, no, this is an important position, so it matters. And in conversations that we have with clients, it comes up who it might be. I mean, we don't know it, so everybody's second guessing. But it does matter because we need the independence of the Fed. That's really important. We're also in a strange situation whereby we now actually see that the inflationary pressures remain. The market is saying, in the beginning of the year as well, there's going to be rate cuts coming through, but increasingly saying, maybe not so much. We actually don't think there will be a rate cut this year. We don't even see a rate cut next year. So there's a bit of a recalibration in the market in the opposite direction even. So you need somebody who can lead that institution, of course, lead and come with credible policies. This is incredibly important. Yes.
Okay, Herald will be staying with us. There's the item of Indonesia, of course, that's emerged this week as a big story. We'll talk more with Herald in a moment on that. I was looking at my Bloomberg screens and I was wondering why we weren't getting some ticks on certain assets, and now we know why. Here we go. Breaking news. The London Metal Exchange is said to delay the market. That's what we know so far. I'm just getting you the headline right now. We'll try and try and understand further, of course, what's going on here. And yes, we'll see what's going on here. Apart from the fact that yes, this is certainly underscore the significance of this. The metals market has been really front and center of global markets this week so far. So breaking news so far there. And of course, we also have the fix of the day, which is now out. And I'll tell you what that fix is. The range is from 694 to 19. The reference rate on your screens. There we go. Thank you so much. 696.78 against the US dollar. 13 minutes to the opening bell. This is the China Show.
You're watching the China Show and just getting some more details on that breaking headline just crossed a few minutes ago that the London Metal Exchange is said to be delaying the market opening this morning. We're getting some reasons for that. And what we understand is that technical issues are said to be behind the reason we've got that delayed opening this morning, or said to have that delayed market opening this morning. So, yeah, it's a red-hot metals market. That's all we can say right now. And, of course, bring you more details on this as it comes to hand as well.
Okay, we'll set that aside for now and talk about the other big story, market story this week here in the Asia-Pacific. In fact, just to borrow parts of what Bill just mentioned there, the price fell so much that we had to deal with some trading halts in Jakarta the last 2 days or so. So following what was really just a whirlwind 48 hours, towards the latter part of the session yesterday, and hence we were down as much as 8% at one point. We closed lower by just 1%. A couple of updates coming through out of Indonesia. These promises for reforms, right? The regulator doubling the free float requirement to 15. Don Antara coming in and say they're weighing some active market, should we call it intervention participation? Okay, sorry, I slipped. And the exchanges eyeing disclosing ownership below 5%. Now, HSBC has just downgraded Indonesia stocks to neutral. Still with us here is Herald van der Linde, head of Asia Pacific Equity Strategy at HSBC. And perhaps I would argue, Herald, and you can disagree with me, you're probably the most familiar with this market among anybody I know. So, do you agree with that description?
Yeah.
You've been here a long time. Okay. Worst over or worst yet to come?
There's a chance that for this particular issue, that actually for the markets, a lot of the worst is over. What we've seen, initially I was a little bit disappointed with the response that came out of Indonesia. We didn't hear anything. MSCI made a statement and it was really quiet. But yesterday they came out and said, listen, we have a task force. The regulator is going to sit with the stock exchange. We're going to talk with the MSCI. We're going to disclose a lot of this data. So that's good. They're working on this.
Yeah.
just a little bit of history. It actually, 2005, I think it was actually a foreign company bought a local company, one of the cigarette companies. Free float went down, but it was a very large company, so people needed to have it in their portfolios or in their ETFs, but they couldn't get the stock. So free float became a discussion. Then they said we put it at 7.5%. We will raise that, but they never really done this. And I think now with what the MSCI has done, they're now forced they're going to make more steps. They've said we're going to go to 15%. And for IPOs, there's a higher threshold. So new companies that come in, I believe, have to have a free float over 20%. So they're moving also in the right direction.
Okay.
How confident are you they can meet the timeline? Because, I mean, yesterday they were saying it would be possible by March to have enacted a lot of these changes. We know the deadline is May. Do you think it's possible that everything can be done in that sort of time frame?
If you look at the language of the MSCI, it says that we will consider in May. So if Indonesia says, listen, we're going to be really serious on this, but listen, you're going to give us a bit more time, I think this will happen. Because the alternative to put Indonesia on a frontier market sort of board is also not reasonable. I mean, it's a large market. It has sufficient amount of liquid stocks. Some of the largest companies in Southeast Asia are listed in Indonesia. So I think that is not, I think, fitting as well. But the ball is in the court with the Indonesians. They got to show progress. It looks like they're doing this at the moment. So that's why I said, listen, I think in that respect, I think the worst is over for that.
The others component comes to mind. So whether it's on an index compiler level, do we see other index compilers look at the same thing? They look at different things, of course. So MSCI looks this. There's another one, of course, that looks at that. Do you think they might be emboldened to, not emboldened, but do you think this might incentivize them to look at investment criteria and other Southeast Asian markets? Because Indonesia, this isn't just a feature of Indonesia.
No, that is right. I think there's two things that could happen. One will take maybe a little bit longer. You're right. The other markets, I suspect, will also sit down, or have sat down yesterday, in, say, Thailand or the Philippines, say, how is that with us? And where do we stand and what do we need to do? So you would think that they might respond to this as well, or at least investigate where they stand, what the progress is, so that they're not going to be in a similar sort of situation. Because it creates a lot of volatility and has impact on currencies and these sort of things. That's the first thing. That would be good, because I think free float increases would be good.
Yeah.
The second thing is, it's very nice to say we're going to increase free float for some of these companies, but you need buyers for that. So then you say, listen, let's say you have a company, it's a large company, it's mostly owned by a few people that are the founders of the company. Yeah. They say, okay, we're willing to sell to 20% so that everything is freely in the market. You need a buyer as well. Yeah. So where's that buyer going to come from? And I think what Indonesia could do, or Southeast Asia, is to look at what India has done. They got these SIPs, these systematic investment plans, whereby a lot of people can actually buy easily, even for $0.50 or $1, you can buy stocks or sort of ETF, a fraction of an ETF. You could therefore get liquidity in the market from the local market as well. And I think that would be good for Indonesia to consider. Because then you have a buyer in the market and it allows you to sell some of these stocks, increase the free float. And that would be a very healthy sort of situation. Yeah.
Harold, great to see you again.
Thank you.
Was Harold van der Linde, head of Asia Pacific Equity Strategy at HSBC. And we're just getting some more context on the LME delayed opening, or said to have delayed their market opening this morning. We're actually getting some commentary from traders who are saying it's not clear when the market will start to trade as well. Again, just going back to the reason for this, what we're hearing is that technical issues are behind this reportedly delayed opening this morning. But of course, the metals market has been one of the most tracked areas of assets so far in 2026. Huge rallies across the board.
Nothing to see here, quite literally. We're also looking at New World here. So we talked about this. Blackstone is said to be in talks to become the largest shareholder there, and New World shares are up 5.6% in the pre-market. Something to watch, of course, as we go into the session today. And this is just to also underscore the broader rally we've seen in the Hang Seng Property Index, and that cohort of stocks has been hitting new highs. Separately, on reports yesterday that 3 red lines on Chinese mainland property, conversations around that have also led to that massive move in mainland property names yesterday. So those are 2 real estate stories we'll track going into the open today. Apart from that, it seems like we're pulling back a little bit from the 28,000 milestone, the Hang Seng Index. But yes, lots to discuss as we approach the final session of the week, just over 3 minutes away, the opening bell. This is the China Show. Good morning. Right, good morning, happy Friday. Welcome back. You're watching the China Show. 40 seconds to the opening bell. We've had a ton of breaking news in the last, let's call it 90 minutes or so. The latest coming through, this concerns this massive commodities boom, and the London Metal Exchange is said to be delaying the market opening. It's said to be down to some technical issues, and it's not clear, based on our queries with traders, when the LME market will open up. I promise you we will get you the latest once we have more information on that massive story. But apart from that, there's an equity market that is opening up, of course, in about 5 seconds from now. There we go. Look at
All right, we're bringing you into the open this morning. And mainland Hong Kong session just about to open today. And we just actually got a call out from Morgan Stanley. They're saying that the first quarter support will remain moving forward. They're seeing it sustaining essentially for A and H shares. This is from Morgan Stanley, of course, but their sentiment indicator for A shares improving modestly, remaining still within that normal range. But they're saying that essentially housing is really the material drag on nominal GDP, but it should narrow as that adjustment tapers as well. Today, you've seen the market session. It's a little mixed so far, but mostly to the downside as well. Let's take a look at what's happening in Hong Kong, because that market just coming on today. I think it's very much going to be focused on that tech story, because you're seeing tech sort of being the overall drag on the benchmark so far of 0.8%. Some of the names we're watching in particular, this is very much an Apple story as well, because you've got Xiaomi, for instance, off 1% so far, but actually an interesting cut from Citi as well to their price target for the stock to $43 Hong Kong a piece. That's off from 50 Hong Kong that was earlier in place. So Apple earnings, of course, one of the big movers in the late trading session today. Let's take a look at some of the suppliers, because very, very strong quarter for Apple in the period.
Solid.
Mark Gurman really said this was blowout numbers, essentially. Very strong demand for particularly their more expensive smartphone range, or the upper end of the range as well. But we're seeing really strong demand in India, China as well for its products. Again, that could be playing into the Xiaomi story, of course. Sunny Optical, one of the suppliers to that, they actually had some preliminary full-year net income figures. You're seeing growth there of 70% or 70 to 75%. That's what they're saying, the business. But let's also take a look at Gigi Mining this morning as well, because we're taking a look at how that stock is under pressure, essentially, but they have priced a convertible bond at 63.30 Hong Kong dollars a share. We are seeing, again, that stock just a bit off. And then New World as well. This is a very interesting story. So obviously New World, we know it's faced a lot of challenges around its debt levels. We're now hearing that Blackstone could be in talks to become New World's top shareholder. That stock is surging as a result. China property, just to mark as well, because this was the big story yesterday, that we had local media reporting in China that the so-called 3 red lines could be removed or be no longer applicable to these developers. We did see a huge rally off the back. Today that's giving up some ground, but at the same time, I think actually Bloomberg Intelligence had a really interesting take on this, and maybe we need to sort of fade the significance of this one as well. You know what? On that note, why don't we get into that right now? Christy Hung is with us right now to give us their reaction to this. Christy's here on set with us. So what was the initial take?
Right, so we think the move is largely symbolic. When it comes to the 3 red lines rule, dialing back on it won't fundamentally change developers' operations. This won't ease the most pressing pressure that developers are facing nowadays, which is falling sales and falling home prices. And the intent of the rule when it was introduced in 2020 was to cool the overheated land market by reining in the over-leveraged expansions by developers. And fast forward, since the crisis, developers have been passively forced to deleverage their balance sheet. So in a way, these 3 red line metrics have been irrelevant, and investors have not been closely looking into them.
Okay, so then what are you watching for the property market, and do you see any sort of signals that we're going to see any sort of recovery, or what is the outlook for you this year?
Right, so I think from a policy standpoint, there are fewer and fewer levers that the government can pull. When it comes to, these policy options, I think I've said again and again, what tools that can be used have been used, we're 5 years in a crisis right now. And, Tier 1 cities, there's still some leeway for, say, Beijing, Shanghai, Shenzhen to remove their home purchase restrictions or lower the down payment ratios. The rest of China, what can be done has been done. So I think what we are most concerned is about the structural issues that I've always talked about, oversupply of the market, the pessimistic home price expectation of the general public, developers' liquidity issues, and the problem of unfinished homes. These are still not going away, and these won't be easily fixed by policy alone.
I guess this is a too broad a question, but generally, where do these developers stand in as far as being able to comply with the 3 red lines? Right.
So with the developers that we have spoken to, they said they've already stopped filing these 3 red lines metrics in 2025. So this is not new. And then you also have, basically 2 camps of developers. The offenders, like Evergrande, Sunac, they've already defaulted. And then you have the compliance one that they have been compliant before, they're still compliant now. So in a way, the rule has already done its job.
Okay, Christy, thank you so much. Christy Hung there with the latest take on, massive market reaction yesterday, so we'll see what the session holds today here. Staying on property, one stock that is actually quickly eroding the initial gains, but still quite up substantially, though, 3.7% at 11.54. That should still put New World shares at the highest since 2023. I'll correct myself if that's inaccurate at this point in time, but that seems to be still the case. Let me give you a stat on volume. So on a normal 30-day average, daily volume on New World gets you to about 16 million shares. In the opening 5 minutes, we're already at 10 million. So there's a lot of interest in the stock today, given, of course, that Bloomberg scoop we just talked about early on, with Blackstone in talks maybe to become the largest shareholder there.
Yeah, great reporting from the team. We'll get more on that ahead. But in the meantime as well, Seng Investment Management has officially launched its new gold ETF on the Hong Kong Stock Exchange. Of course, we were covering this yesterday in the session. But to talk us through the launch and the company's broader business strategy, let's bring in Seng Investment Management CEO Rosita Lee joining us this morning. So thanks very much for taking the time. What did you make of the trading debut for the ETF, and what's demand looking like? What's the outlook like for you as well on that?
Well, actually, we're very excited to have the gold ETF listed yesterday, and we received a very strong demand in terms of turnover, and the turnover actually on the very first day already exceeded 100 million Hong Kong, and the AUM actually doubled. And the reasons of why we launched this gold ETF is mainly due to the growing demand of the local Hong Kong investors in physical gold, and actually they would like to have a more flexible and accessible gold investment solutions. And then we come to the idea of providing them the trading flexibility while at the same time provide them with a solution in case they want to redeem their gold physically.
How does that work if they want to get the physical bit? What are the mechanics to be able to do that?
Well, for that, it's pretty simple and straightforward. And of course, if the customers want to redeem in gold, then they have to do it in the primary market. Directly through a selected broker, and not in the secondary market, because for secondary market, all settlement will be in cash. So if they are interested in redeem their holdings in gold, then they approach their designated broker, and then they will arrange it directly with the fund manager, which is Hang Seng Investment, and then we will decide which is the best way for them to receive the gold physically. And for those investors who are also Hang Seng bank customers, then they have the privilege to redeem or collect the gold at the Hang Seng's headquarters. And to meeting that redemption requirement, then the minimum redemption unit will be 250 100 unit.
Okay.
And or the multiple of it.
The structure of that and how you can redeem physical gold, does that tell us that this is an ETF that's been designed more with a retail customer in mind as opposed to an institutional investor? And second to that as well, what are the sort of inflows that you're targeting for this?
Okay, that's an interesting question. So actually, when we first have the idea in mind to develop a very different gold ETF in the Hong Kong market, because there's already some other gold ETF already available in the market, we are targeting not just individuals investors, and not just the private banking or retail customers, but also the institutional investors or even the sovereign fund, because we have the gold stored exactly 100% in Hong Kong. And the another unique selling point of this gold ETF is that we have all the trading, settlement, custody, and redemption all settled in Hong Kong, utilizing the infrastructure that Hong Kong already have for gold trading. So even for institutional clients, they might have a huge demand to store or hold physical gold. Then now they have a more flexible solution. Instead of storing the gold physically by themselves, which is quite troublesome or costly, they can now just simply invest into this product. So the products also, we are going to issue tokenized share class as well. So to answer your questions, we are targeting different background, different types of gold investors and institutions, sovereign funds, individual clients, or even those clients who prefer to trade investment products via digital asset platform.
Right. You mentioned just at the very start there was very big turnover, of course, in the first day, and I think AUM you mentioned, did AUM doubled?
Yeah.
Can you give us a sense what's AUM now, and ideally where would you like to see? Obviously the sky is the limit, but where would you like, realistically, where do you think AUM will go?
Yes, well, actually the AUM now is 200 million. 200 million Hong Kong, yes. And then this is only the first day. Yeah. So we expect that there are more inflow come with us. And then there's no limit at all because, the fund has the capacity to issue new unit. So as long as there's new demand, then we can initiate new unit to meet the demand of the investors. Yeah.
And what's your plans also around the tokenization aspect of this and looking at different options, including a listing on some of the digital asset exchanges? What kind of timeline do you have for that, and any preference on exchange as well?
Yeah. Well, actually, we already entered the final stage of testing the ecosystem and infrastructure. So our plan is to issue tokenized share class within the first quarter this year. So it's pretty, it will be in the coming 2 months' time, yes. And in terms of our distribution channel, and of course, we would like to expand the distribution apart from the very traditional wealth platform. So definitely those licensed digital as a platform will be our preference.
In terms of just broader company strategy, specifically product strategy, right? So what industry or regulatory trends in Hong Kong do you think will be the most important to watch this year for your company and for the ETF industry?
Well, I think for the ETF industry, which I think that actually we see very good inflow from the East because of the ETF Connect, and there's also the increase in interest in the Hong Kong China market. There's also inflow from the international market as well. So I think currently there's a lot of very favorable market development initiative launched by the government, and we also see a lot of product innovation. So I think the environment is pretty favorable. So with more new participants entering into the market, I think we can grow the pie together.
Okay, and just give us a rough sense of your pipeline, your product pipeline this year, without giving away, of course, the secrets. But is it going to be a busy launch year for Hang Seng?
Definitely, we will keep on observing the demand from the market and then launch products appropriately. Yes.
All right, Rosita, thanks so much for joining us this morning. That was Rosita Linde, CEO of Hang Seng Investment Management. And also just, I think it's quite interesting to make that comparison from gold to what was supposed to be a digital gold and certainly is not behaving anything like it. We're, of course, talking about crypto prices this morning.
It didn't turn out to be the debasement trade that some folks had hoped
it is actually quite exceptional to me that this time last year we were seeing a huge run-up in crypto prices, and we were getting all sorts of calls out there that we could see crypto hitting, or Bitcoin hitting, $250,000 by the end of the year. There was so much optimism around Trump policy support as well for the asset class. But now you're actually setting up and looking toward $80,000 per token. That would really be sort of a real price level for support. But lots of weakness essentially across the crypto space, and you're continuing to see that this morning.
You really have, and I think it's not normal days in the market when things like silver, the Jakarta stock market, some of these AI equity names are acting more like Bitcoin a few years ago than Bitcoin is, right? And it just underscores really changing assumptions and how assumptions can go completely wrong sometimes. For now, at least. Okay, don't get angry with me. All right, coming up here, the Bitcoin crowd can get very rowdy. All right, China's signaling easier access to its markets for UK businesses after President Xi's talks with Keir Starmer. Closer look at what they're calling more a stable relationship next. This is The China Show.
All right, time for a look at what's making headlines in China's national media this morning, and no surprises really. It's the UK Prime Minister Keir Starmer's visit that's absolutely dominating the front pages in the session today, or coverage today in mainland media. But the party's official mouthpiece, that's the People's Daily, giving front page coverage or prominence to his meetings with President Xi and Premier Li Qiang as well. So the coverage strikes an optimistic tone. It's focusing on Beijing's call for deeper economic ties and the need for the UK to transcend differences.
Yeah, Starmer is the latest world leader to visit Beijing amid a more volatile trade and geopolitical environment out there. For more on what took place and the milestones that were hit and some of the announcements, Stephen Engel, our Chief North Asia correspondent, is here with us. What's been agreed to here, Steve?
Well, of course, this is a big diplomatic win for China. Obviously, they've been having this parade of leaders. 5 of the 7 G7 leaders, including Trump, have or will be going to Beijing in this first quarter. So it's significant, and it's a similar story, really. We saw Mark Carney go there and obviously declare a new world order, a strategic partnership. Similar verbiage as well with Keir Starmer there right now. Day 2, then he goes on to Japan tomorrow and meet with Takaichi-san. But I get ahead of myself. The deals that have been signed, I think there were at least 10 MOUs signed between the UK and Beijing yesterday. And also there's this new services partnership. It stops short of a services deal. That's still potentially in the work. But essentially it opens up the possibility and gives more clarity and market access to Britain's healthcare, financial and professional, legal and education sectors. And keep in mind, Britain is a big powerhouse in exporting its financial services, number 2 in the world after the United States. So this potentially is a big win for the London banking group, whether that's HSBC, Standard Chartered, Barclays. The heads of those banks were all with Keir Starmer in Beijing. There's a number of other deals. AstraZeneca did a deal in Beijing. We saw China agreeing to cut in half the tariffs on Scottish whiskey from 10% to 5% on the tariffs. Those are the tariffs of 5%. So there's some victories there. And for China, a big diplomatic win, really, because they've been talking throughout this Trump administration and even before the Trump administration about and appealing to America's allies. You should chart your own course. You don't necessarily have to, and I'm paraphrasing, you don't necessarily have to align your foreign policy and your trade policy with the United States, as Canada had to a large part under Justin Trudeau, and as past prime ministers of the UK have done as well. So it is sort of a new, I don't want to say new world order, but a new dynamic, definitely.
So then I guess that really speaks to the framing of how they're also wanting to position the relationship as well.
Yeah, so how Beijing looks at it as the diplomatic win, but also there's opportunities for them as well. I think they've announced another Chinese bank is going to have yuan clearing, offshore yuan clearing in London. There's a number of different financial and business wins that the UK can have. But again, it's really aligning trade and geopolitical relationships on a separate footing with these G7 countries that is not necessarily completely in line with the United States. This is what Donald Trump, though, had to say when he was asked on a night out on the town, when he was asked by reporters, essentially, what does it mean when the UK is striking its own strategic partnership similar to what Canada did? And Mark Carney.
Well, it's very dangerous for them to do that, and it's even more dangerous, I think, for Canada to get into business with China. Canada is not doing well. They're doing very poorly. And you can't look at China as the answer. I know China very well. I know President Xi's a friend of mine. I know him very well. But that's a big hurdle to go over when you get Canada.
And dovetailing with that, Xinhua News Agency is also reporting that the UK and China have agreed to resume their security talks as well. So that would not play very well with the White House.
All right, Steve. Well, we'll see, of course, how the UK trip or Keir Starmer's trip to Japan proceeds as well, and any headlines we get out of that, and what the reaction is from Beijing as well. But that was our Chief North Asia correspondent, Stephen Engel. And if you're a subscriber and you want to rewatch that interview or this discussion with Steve too, you can. That's via our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages. So do check it out. The function is TV Go. More ahead. This is Bloomberg.
Welcome back. All right, all eyes on commodity markets. Unfortunately, we're not as pricing is not as available, as comprehensive today because of some issues with the LME. Our latest understanding is there's no specific guidance yet on when things might open. That's according to traders. Our reporting suggests that the technical issues have prevented the opening so far. Hence, we're looking at aluminum, for example, traded in China. You have copper, of course. You have both copper contracts, Shanghai and Chicago. Brent on your screens as well. But that just also to mention, Chalco is actually down quite substantially today. That's really on the back of, number one, the aluminum story. I think you also get CICC, I believe, also coming in and changing, I think, their call there on the stock. And apart from that, what else are we tracking here? So you have Chalco, you have copper stocks. Jiangxi Copper's coming up on your screens.
Indonesia.
There we go.
Yeah.
I heard it's in the news this week.
It's been quite an exceptional week for Indonesian stocks. Actually, we've got some reporting from some of the funds we're speaking with. They're saying that even though you've seen these overtures from Indonesian regulators to make changes, the big question is, will that satisfy the MSCI? And so some of the investors we're speaking with are saying that really this sell-off could actually be far from done because more clarity is still needed. But you are seeing some upside. That's the last close. More ahead. You're watching the China Show this morning, coming back with an update on the trading delay that we've seen at the LME this morning. So it typically would have opened an hour ago. What we're understanding from traders is that the LME market is set to open at 10 a.m. So essentially in the next 30 seconds or so. But it has been, of course, a very wild week for global metals traders. What was behind that trading delay this morning? Again, this was according to a notice that was sent to brokers that was seen by Bloomberg. But what was behind that was some sort of technical glitch, and that's had to be investigated over the past 60 minutes or so, essentially. But what we understand, as we said, the LME market will be opening just in a few moments from now. Yeah, here we go. And I'm not being impolite by not looking your way. I'm literally glued to my screens. Here we go. We do have an update now. So things, aluminum is trading, copper, we now have a price for that. Lead, not yet. So we have aluminum, we have copper, we have nickel, we have tin, and we have zinc coming online right now. Aluminum's up 0.3%. We're looking at copper down about 1.6.
We're also getting nickel coming across down about 0.9% and tin's down about 1%. Suffice to say, yes, we are up and running as far as this trading delay because of technical issues. What those technical issues were specifically, unsure at this point. But the point at this point in time is, of course, we are now getting a price on these things. It's also worth pointing out, of course, right? We were at 14,000 on copper. We are getting a pullback across quite a decently long list of Chinese copper stocks today. I would imagine on the back of this decline we're seeing in copper prices, and the initial proxy that we actually had earlier on were prices in the U.S. in Chicago, and of course the copper contract in Shanghai, which already was pointing to the declines we are seeing right now across these markets. We are looking at, this is now going to go hot on your Bloomberg terminals. The London Metal Exchange, well, I assume it's going to go hot. This is a big story, of course, has resumed trade after a delay. Speaking of, another market that's opening up at this point is Indonesia.
Yeah, so this was, we actually saw the rally in Indonesian equities into the end of the day yesterday, but of course the big story this week has been the MSCI warning about the structure of the Indonesian stock market and being too closed to investors and not enough transparency. And so we actually have seen regulators coming out and saying that, yes, we take this very seriously. We're prepared to make changes. We will make them in very short order. That was enough to boost market sentiment into the close yesterday. It seems to be reflecting so far, even though a lot of the fund managers we're speaking to are saying the worst is not done just yet. But we'll, of course, be tracking that throughout the session today.
Yeah, I mean, the outflows could still continue, right? So I think we had Goldman with UBS, and about 30 minutes back, HSBC also coming out and downgrading their outlook on the market. I guess in terms of is the worst over, it depends what you're asking specifically, right? Is it on price or is it in terms of regulatory direction? Yeah,
and I think a lot of the people we're speaking with are just saying we don't know if the changes that Indonesia's pledging to make will be enough to satisfy the MSCI, and that's their reason for caution. But of course, Harold van der Linde from HSBC had quite a different take, and I think it is important to note as well, he's someone who has had long-standing connections to Indonesia and a very deep knowledge of this market. But let's just take a listen to what he had to say.
There's a chance that for this particular issue, that actually for the markets, a lot of the worst is over. What we've seen, initially I was a little bit disappointed with the response that came out of Indonesia. We didn't hear anything. MSCI made a statement and it was really quiet. But yesterday they came out and said, listen, we have a task force. The regulator is going to sit with the stock exchange. We're going to talk with the MSCI. We're going to disclose a lot of this data. So that's good. They're working on this.
Okay, now Indonesian regulators towards the latter part of the session yesterday, and hence why we only closed lower 1%, and hence perhaps why we are opening slightly to the upside today, had these things to say almost across the board, from the regulator to the sovereign wealth fund to the exchange, talking about how they plan to, of course, meet some of the requirements and also avoid, of course, the worst case, which in this specific case would be a downgrade to frontier market status. But are the problems over? More context and depth with Abhishek Vishnoy, our senior Asia equities reporter, joining us from Singapore. Abhishek, take it away. The mic is yours, sir.
So, I don't think problems are over at all. Yeah, there is some semblance of buying coming in, some support on back of, let's put it this way, that Indonesia's national team is stepping in, agreeing with what MSCI has asked, possibly looking to buy the market on depth. So there is some support trickling in. But are Indonesia's problems over? Far from it. Even while HSBC's strategist said that the worst might be over for MSCI-related losses, they have downgraded the market to neutral, from an overweight allocation, citing growth concerns. Now, look this in context of over the last 2 days. You have gotten to a point where it was the worst two-day rout since 1998. You saw downgrades trickling in from Wall Street banks. You have seen biggest weekly outflows since April. This is a shift of regime. This is a shift of how you would be looking at the market. There is some buying coming in, yes, at a price, everything looks good. But these downgrades that are coming in, these outflows that are happening, they clearly show that the structure has changed. How you look and view Indonesia has changed, and there is a lot of work to be done before this image of not working, in context of what investors want, can be shed. Now, there are more outflows on the anvil. David, just in your show, you have mentioned several times how Goldman is estimating about $13 billion can go out if FTSE joins, and downgrades the market. That's a huge number. Last year, we saw like about $1 billion moving out. But look this in context of since the end of 2020, there is about $8 billion that came in. So there is still $6 to $7 billion of active money in play. This is not just about MSCI. What MSCI's warning has done, it has underscored the problems in Indonesia right from macro to micro. And this underscores, like we have said in one of the story, a crisis of confidence. And when there is less confidence, it leads to less valuations. And then begins the cycle of it weighing on earnings, weighing on deficits, and maybe even on the debt market. So, it may find a bottom. But is there a huge rally ahead? It doesn't look like that.
Abhishek, just hold that thought, because we've actually had a headline crossing from Reuters just in our last few minutes. This relates to another very big news development this morning. President Trump earlier today saying that he is looking to announce his Fed pick for governor on Friday morning. That's US time, so Friday evening, our time in Asia. Reuters is actually reporting that the former Fed governor, Kevin Warsh, met with Trump on Thursday. Now, of course, that's quite significant because he is the person who's seen by many, including betting markets, but as the lead contender for this position. And it's a pick that I think is very interesting because even though he's been dovish in recent commentary, he actually has quite a hawkish history as well.
Yes. Yeah. People are now, if not already, have been digging through sound bites of each of the four on your screens to get a better sense of what their inclination or orientation might be in case they get the nod. And I think it's worth pointing out, right? This will be a nomination which the president has given a timeline, which would be Asia time Friday night, and then you have to go through the approval process, right? So just putting the two things together, how that headline is phrased out of Reuters is that Kevin Warsh met with Trump. I'd just be careful in terms of just jumping to the conclusion that that might be, of course, the pick, but I won't be surprised if that is, to the point you're making. Now, this was something we actually asked Herald van der Linde of HSBC earlier on, right? So if you look at the history of the four, does it actually matter who it is? And in terms of the timing of when the announcement might actually come and how the president actually described who his pick will be, let's have a listen to the U.S. president and how he actually phrased it.
What day will you be announcing your Fed chair pick next week?
Tomorrow morning.
Tomorrow morning. And do you know?
I'd rather say it tomorrow, but just an outstanding person and a person that won't be too surprising to people. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so.
So if someone who was on your short list, sir?
On my reasonably short list, yeah.
Abhishek Vishnu is still with us out of Singapore. Abhi, we've talked about this for several weeks. I mean, is this largely priced in your view, Abhi?
I don't think it's priced in. I mean, it looks like, there are several candidates, and any candidate that would come in would have to be largely acceptable to market and the course that market wants to take. Now, when you want to look at the course that market wants to take, you have to look where last year ended. I mean, it was record gains in most markets. US also did well, not on a relative basis, but on absolute level. And, Trump himself is looking for a lot more rate cuts, which is going to infuse a lot more liquidity into asset classes. So anybody who comes in would largely be following that path. It would be a complicated one, and let's see if, the US Parliament actually supports his appointment. But we'll be watching this with keen eye. Even prediction markets, I think the odds of Kevin Warsh actually taking that position, as you can see, have increased. But whoever comes in has to follow a path where there are more rate cuts than what the swap markets or equity markets are pricing in right now.
Abhishek, thanks so much for joining us this morning. That was our senior Asia equities reporter, Abhishek Vishnoi there. And coming up as well, we're going to get to the other big thing this morning. It's been a very busy day, but Apple's big quarterly earnings beat all things tech, of course. Constellation Research is joining us, and it says the state of Mag 7 remains solid. We'll have more details next. This is Bloomberg.
Welcome back. Some breaking news out of Indonesia. The CEO of IDX has resigned. And the one line that's come out so far along this news is that the CEO hopes my resignation will help the capital market get better. I think the way that's phrased is kind of funny, but the CEO of the stock exchange has resigned after the market rout. The market, it's worth pointing out, was already up even before this news was made public. It's rallying even further after it. Whether this is a function of the resignation itself is obviously unclear. Obviously, markets are trying to juggle a lot of information right now as far as Indonesia is concerned, including, of course, all the pronouncements yesterday that they set out to hopefully be able to meet some of the requirements coming out of MSCI rather. But yes, that is a red headline that's coming through. The CEO of the stock exchange has tendered his resignation after this market rout. We'll get you more details on the story in a moment. Fast-moving one, of course.
Yeah, very fast-moving. And as you said, we saw lots of overtures yesterday into the close of the session that really helped to at least lift sentiment or stem the selling pressure. Today you've got that main benchmark up 2%. But let's also take a look at what's happening with Apple supplies in Asia today, because that has been the other big story for us, or another of the many big stories really for us today. But Apple posting very strong numbers after the bell today. Really strong holiday quarter for the business. Some concerns, though, particularly around the supply of memory chips and how much that's going to be weighing on margins. They didn't see an impact in the current quarter. They don't see it in the first either. They're saying it could start to show up, though, in the second quarter of this year. So let's get more on this now and bring in Ray Wang. He's founder at Constellation Research. Ray, thanks so much for your time. And let's just get started. Your key takeaways from the numbers this morning.
Yeah, I mean, it's huge. I mean, the super cycle is real. What we saw was 85 billion in for iPhones, which is a huge number, 30 billion in services, and more importantly, 25 billion in China. That is a big deal, especially on the Apple side. And this is really helping them with 48 to 49% margins. This isn't something people were expecting. The street was expecting, that they'd actually meet expectations, but they blew expectations out of the water.
Okay, does this buy them enough time, though, as they try and massage in perhaps the more difficult challenge over the next few years is, Apple is an AI company.
David, you're absolutely right. But Apple is an AI company in one way because you have billions of devices that are actually accessing the marketplace. And I think that's the important piece, whether they're going to use Apple's AI, whether they're going to use Gemini or ChatGPT or Anthropic. The point being is that is the interface that people are using to access AI. But for them, they do have to get their AI strategy straight. That partnership with Google and Gemini is a really good first step. Of course, there's other activities that they've got to do, from partnerships to feature sets that they actually have to enable. But basically, if you trust Apple with your data, they're going to be able to do a lot, especially in the healthcare side, and of course, in spaces that are ambient experiences, things that just pop up in the background that enable you to be able to do nudges, help yourself perform better, check in on the health side. Those are all things that we think that Apple's going to be successful in. The challenge is really just making sure the AI story makes sense to the street.
What about the pickup that we saw in emerging markets, and I'm talking specifically about India? China really stood out because Apple has been losing ground there, but seemed to be able to really recover. How much of a growth area and how significant is that for Apple moving forward if it can continue to I guess, gain new consumers in these markets as well?
They've done an amazing job navigating the commoditization of the smartphone with the luxury device aspect of having an iPhone. It is still a status symbol, especially in those markets where they're gaining ground. India, it's a status symbol, and more importantly, what's going on is the fact that Apple is starting to do manufacturing in some of these regions as well. So they've navigated tariffs, they've navigated this commoditization of a smartphone, and more importantly, they're still seen as a trusted and luxury brand. And that really means a lot, especially for the 48 to 49% margins they're getting in the marketplace.
Ray, what's the price target on the stock? And is it still a high growth company? Is it a mature tech, is it a mature tech stock? How does the market need to be framing what multiple they should be attaching to this stock?
I think it's still going to be a stock that's kind of one that you put in your portfolio in funds. It's kind of a safety stock at the moment. The target is 300, but it's not high growth yet because they've got to show that the super cycle plus the AI and AI are going to come together and actually transform everything. I don't know if you had a chance to try the AirPods with the translation. It's actually really fun. It's actually pretty good. All these little things in AI are what keep you onto the iPhone. And I think over time, the collection and accumulation of all those feature sets are going to be something that we're just going to take for granted. And that's how they're going to enter the AI market. Not a big bang kind of AI play, not a brand new language model. That's really not their game.
Ray, it's been, of course, a very big week for tech earnings. Lots of different numbers, Meta, Microsoft, Tesla, Apple as well today. Let's talk about Microsoft in particular, because I think it was really the stock that was punished the most, even though, yes, some strong numbers, but concerns still about the cloud business in particular.
This makes no sense from a technical perspective. Azure grew 39% instead of 40%. Let's go punish them for losing 1%. Yeah. That makes no sense in this marketplace. You got RPOs of $625 billion. Like, how do you say that's a bad thing? Fine, it's all OpenAI, but 28% of it was not OpenAI. And so the real challenge is, how much do you think Microsoft should be spending on CapEx to get into AI? Is that $80 billion a year? Is that $100 billion a year? Looks like Meta can get away with $135 billion a year. So this made no sense. And if you're a big Microsoft believer, just hold in. If you're not, I would get into the market because this is a dip that makes no sense. Now, on the other side, you've got Satya, who's actually focusing in on actually the strategy of where Microsoft is going to go in the future. And that is a good thing. And you've got Judson, who's the execution machine, making those sales happen. And you've got Amy watching the bank. I mean, that has never been a better triumvirate in the software business. So I think this is just overblown, but they did take out the Dow along the way. So that's the crazy thing. But on the Meta side, that's actually a different story. Meta is super efficient with AI. They're using AI internally. And as Mark said on the earnings call, one AI agent or bot could take out 10 employees. And he's not kidding. He's already done that in the back office. Their revenue operations, their back office, they're able to get 30, 40, 50% digital labor, and they're not going to stop. They're going to get it to 80, 90%. So they're running really efficient, and they're also throwing out big pay packages for AI talent at the same time. So the street seems to say, that's fine. You grew 24% in ads, we'll reward you. Keep investing in AI to use it internally and, of course, externally to drive revenue.
Yeah, and Tesla also seemed to be rewarded as well around their CapEx plans, because $20 billion of spending projected for this year, that's double what analysts were expecting on Wall Street.
Well, Elon's basically moving towards his compensation plan, and he's basically optimizing for it, as you can tell. Getting rid of the Model X and the Model S made a lot of sense. It was only doing 11,600 orders. That really is nothing compared to the 406,000. The robo-taxis are basically the high volume play that keeps the factories humming. And shutting down the factory in Fremont gives them the ability to build the Optimus robots, which they need to get to. That is the future. That's probably your 24-month outlook. The robo-taxis are probably in your 12-month outlook. And more importantly, the energy business. That's the part that I love the most. I mean, it's up 25%, 3.84 billion. They put in 46 gigawatts, which is huge of energy production. And that was up 49% year over year. So that's the hot spot in the short term.
Ray, thank you so much for taking the time to speak with us. If the background didn't tell me, I wouldn't know it was evening your time there in the U.S. Ray Banter, of course, into the weekend. Have a great and blessed weekend, Sir. Ray Wang there, founder at Constellation Research, joining us out of New York. Okay, more on the breaking news. Right, so Donald Trump, the White House is said to be preparing Mr. Warsh for the Fed nomination. As you can see, the dollar is on the way up, 0.5%. We've been tracking the ins and outs of the story for the last 2.5 hours or so since the president, about 2 or so hours back, did tell reporters and effectively the markets that he would be making his nomination, his decision public Friday morning, which would be evening, of course, in the Asia Pacific. We've had some reporting as well from others talking about how Mr. Warsh had met the president, and now we understand, based on our sourcing as well, that it's looking like he will be getting the Fed nomination, and the dollar is rallying quite substantially right now on the back of this. We're now up 0.5%. The opposite mirror effect is taking place across the equity market, where MSCI Asia Pacific has actually now just touched, in the last few seconds or so, 1% to the downside. Stronger dollar, weaker equity market, more clarity on who will likely lead the Fed after Jay Powell's term ends.
Yeah, he's certainly been the one that's firmed up as the favourite pick over the past few weeks. I think what's going to be really interesting is if indeed Kevin Warsh is nominated to be the next Fed chair, okay, what are the challenges he faces in the confirmation, but also what are the challenges that he experiences to try and corral his colleagues? Because in recent years, he's been quite a strong Fed critic. And he's said that the central bank needs regime change would involve, quote, breaking some heads. So is he going to face any challenges to build trust, rapport with existing FOMC members or Fed staff? I think will be one of the key questions moving forward. And then as well, you know, what is his policy stance going to look like? Because I think, like Jay Powell, he's someone who was a lawyer first. He worked on Wall Street. He became a Fed governor. That's sort of a similar trajectory to Jay Powell. But Kevin Warsh is someone that when he was Fed governor from 2006 to 2011, he was actually quite hawkish. He's changed his tune in recent years, but how dovish can we actually expect him to be?
Yeah, well, those years were aberrations if you think about what took place between 06 and, of course, 2011, which was going into the crisis and coming out of the GFC. And I think you hit the nail on the head there, Belle, because our colleagues at MLive have been talking about this for weeks now. Don't focus too much on Fed independence. Focus on the divisions within the Fed of the next Fed chair being able to corral, of course, the FOMC into looking objectively at the economic numbers and extrapolating. And by the way, that's no easy task at this point in time, because the context of the numbers arguably in recent weeks has been one from that's gone softer to something that's more resilient, right? So the delta in the data is also making it more difficult for whatever job that's going to be in terms of assessing where rates need to be, or are rates where they need to be right now, extrapolating into the future.
And I think that's been one of the biggest surprises sometimes for Jay Powell, just how little dissent there has been at certain meetings, even though you've seen quite a big range of projections that have come across as well in the dot plots. But when you come down to the actual decision, often there's quite a lot of unanimity amongst the FOMC with, of course, obvious dissenters like Stephen Myron, for instance. But I think we can leave that here, and let's also talk about the other big story that's come out just in the last few minutes, and this is
Which one? But there's two big breaking news in the last
yeah, we had LME, of course, delayed on the pricing this morning for 1 hour. Okay, we've got the LME trading once again, but let's talk about Indonesia, because we just had the stock exchange head, the CEO of that, resigning. We have seen the Indonesian stock benchmark as well gaining this morning. We did have some big overtures yesterday from regulators essentially that seem to improve sentiment. It's being carried across into Friday trading today. But we did, as I said, that Indonesia Stock Exchange CEO resigning after the market rout and just talking about he hopes this brings a bit more, I guess, relief to traders.
Yeah, Iman Rahman there saying he will be stepping down following the two-day market slide. The market is back above the 8,000 level. We closed just below that, of course. And yeah, we are looking at gains across Indonesia in the first 25 minutes. Let's call it day 3. You can follow more on the market story, all the breaking news in the last hour or so. We have plenty to sink our teeth into. MLive is the place to go if you're a Bloomberg Terminal subscriber. Plenty more ahead. This is The China Show. Right, welcome back. Okay, ton of breaking news this morning. We'll start things off with the latest and arguably the most globally consequential of the three here. So we now understand that the White House is said to be preparing the individual that you see on your screens, Kevin Warsh, for the Fed nomination. The market is already reacting to this in the form of point 1, a stronger dollar. Point number 2, you'll see it very, very shortly, a steeper yield curve in the U.S. We're steeper by 4 basis points. The equity market is going the opposite way up the dollar, which shouldn't come as a big surprise. It's also worth pointing out that equity futures were already under pressure even before information around this surfaced. You look at the yield, everything from the 2 all the way to the 30-year yield, and as you can see, we're unchanged in the 2-year. Is the market treating this one as hawkish? If you simply look at the last few minutes, the answer to that would be yes, but certainly context is more important here. Bill.
Yeah, and actually, we've got our MLive team glued to this very story, and Mark Granville's just put out a post saying it's very rare, actually, to see this sort of yield curve steepening during the Asian session. And to your point, this certainly suggests that the move is defensive, and also that traders could be preparing for a more hawkish, rule-orientated regime under Kevin Warsh. That is, of course, with Jay Powell, Lisa Cook, they're set to remain at the Fed, so that could actually add some tension, essentially, to each of the upcoming meetings. I mean, as we were just discussing earlier, Kevin Warsh is someone who's been quite critical of the Fed in recent years, so is he going to face challenges to essentially cooperate with his colleagues and bring some sort of consensus to decision making as well? Yeah,
focus on the divisions of the Fed. Don't focus too much on independence, I think was the other point, because we were looking too much in one direction that we forgot about. Fine, if we did get the individual in place, there was still this division around the Fed as to where rates really should be, right? In fact, even the emphasis on the dual mandate, which one would is of greater weighting at this point in time. And I think we went from inflation, obviously, the last few years, into the labor market as people started to talk about the softening of the economy. But then the data has somewhat been resilient, and I hedged that very carefully because it's not quite clear comprehensively, but there has been a hardening of the data and a firming up of the data recently, which I guess might swing the pendulum more in favor of inflation, which, by the way, right, inflation has remained sticky, right? And you look at the 10-year yield and where it is at 4.3% on the 10-year yield does underscore that. I'm just having a look at the pricing around if this is having any impact at all on when the market thinks the Fed will move next. So yesterday, the first full rate cut appears in September of this year. I'm just fast forwarding my screens right now. That has now, in fact, still in September, but it's been slightly pushed back to September. So it's fairly consistent, hawkish, slightly hawkish move across the dollar, the rates markets, and the futures market on Fed fund futures here. Yeah, and I think our Bloomberg economics team has really great commentary on this. They're saying that if you look at his reaction function, Kevin Warsh, he's someone that does give more of an emphasis, or puts more emphasis on the inflation outlook than he does on any sort of labour market concerns. And inflation is sticky in the US. So, yeah, do we even end up seeing? I mean, we were just speaking with Harold Vanderlyn, for instance, from HSBC. They're saying they're not even expecting a Fed cut this year, not even next year as well. Yeah, markets are looking at this. I mean, we talked about the dollar. I think, can I ask my producers to also, let's bring up equity futures in the U.S. because we are tacking on further losses as we speak. The dollar is extending those gains. U.S. futures on your screens. We're now off let's call it 1% on NASDAQ futures. Russell 2000 off by 1.1%. So we go all the way from the main, the broader benchmark into some of the tech-heavy gauges as well, 1.2%. So you do get a sense that some of the long-duration assets in the equity space are feeling the pinch of higher rates and a steeper yield curve, which is not too common for this time of the day. When you look at the commentary coming through. In fact, it's something we rarely look at specifically at this time of the trading session, 24-hour cycle, which is really the steepening, but certainly more on the absolute level of the yield curve. So currently we're looking at treasuries right now. Let's get it up, please, if we can, yet again. And we are looking at the 30-year up by 4 to 5 basis points. The 2-year is unchanged, but has, in fact, in the last few minutes or so, tacked on ever so slightly to the upside. The 5 and the 10-year yield on your screens. This will feature, of course, as this is perhaps now your top story across markets this Friday. Just to recap, of course, in case you're joining us right now, the Trump White House is said to be preparing Kevin Warsh for the Fed nomination. The timing that the president gave...
It's tomorrow morning, essentially. Okay. Tomorrow morning in the US, so it's Friday evening for us. So, yeah, just to perhaps in the next 8-10 hours or so, 12 hours from now. But let's get more context on this. Bring in Garfield Reynolds. He leads our Markets Live Asia coverage. And Garfield, it seems like, I mean, we're getting at least some sort of knee-jerk reaction. But just talk us through this nomination. If we do indeed get it for Kevin Warsh, what's the significance of it and what does it mean for the trajectory for rates?
Well, the trajectory for rates on the one hand is still going to be pretty clear that there's going to be an overwhelming expectation that at the first post-Powell meeting for the Fed, which is in June, there will be a 25 basis point cut. That's about an 80% chance seen at the moment. And that would probably firm up, once whoever is chosen, and almost certain to be Kevin Warsh, it would seem, the way things stand at the moment. The reaction that we're seeing across markets has a lot to do with the perception that Warsh is relatively hawkish compared to some of the other candidates that were floated, such as even Waller, but more importantly, Rick Reeder from BlackRock, who was seen as having the potential to be significantly more dovish, as well as being, he kind of had a similar flavor. If you remember when Scott Bessent was named as the Treasury Secretary, he was welcomed by fund managers as one of us. So getting a BlackRock alum as a Fed chair would also have been a kind of a one of us moment. So traders are definitely leaning into the idea that Warsh would be more of an inflation hawk. Yes, he would cut rates, otherwise Trump wouldn't have let him become his nomination, but he will be reluctant to, he will work hard to try and balance the inflation and growth sides of the Fed's mandate. And if we were to get the sort of AI-driven economic strength that we've currently got, if that sustains and if the labor market holds up, it's seen as being pretty unlikely that Warsh would just cut rates anyway. He would take a more measured approach, and in particular, he would be very conscious of leaning against any return towards QE. That's why, for example, Bitcoin was an early mover to the downside in response to the speculation that Warsh was going to be the pick.
Yeah, Garfield, I've been obsessing over the 30-year yield. It's really at the part of the curve where we're seeing the most movement, a lot of the activity right now. So we're at 4.9%, up by 5. A little bit more, the 30-year yield would be back to levels we last saw in early September. Garf, how useful is looking at his history back in 06 to 2011, when of course we know what happened in the world back then, as a gauge of how of his orientation and how he might look at the current date and how that might inform him the proper direction of interest rates?
Well, I think it is fairly useful. You have to go with the information you have to hand. Yes, Donald Trump wants famously interest rates to be at 1%, but ultimately Trump does look like he's actually compromising somewhat on going for somebody like Warsh. It's not, if that is whom he picks, we always have to be careful. Lots of times when everybody thought that President Trump had decided he was definitively going to do one thing, he turns around and does another. So there's always the possibility for a surprise. But if Warsh is picked, then you might have the sort of situation you had with Powell, where Trump was actually quite happy to have Powell as Fed chair. Later, he soured a lot on him. So there's the potential there that this does end up being, less dovish than Trump might like. And in fact, the 30-year yield that you're mentioning, if the speculation that Warsh is likely to be more hawkish than somebody like Rick Reader would have been, or Moran, or other potential candidates, then you could argue that the curve steepening that's going on today is rather misguided. And in fact, the risk should be for curve flattening, because if you're going to get a Fed chair who is willing to cut rates at cut the cash rate, but be moderate about it, and is going to take account of inflation risks, that should be supportive for the longer end. It's just going to take a while for that to play out.
Garth, it's interesting because we've had so much concern around Fed independence over the last few months, and as you say, maybe that gets faded. But at the same time, what comes to the fore, and we've been discussing just in the last few minutes, is concerns around how much Kevin Warsh would actually be able to work with his colleagues, given just his history in recent years of criticising the Fed. Does that become a concern, just trying to reach consensus amongst officials?
Well, I think if there is a situation where the Fed chair is needing to reach consensus and can manage to do that, that's kind of how the Fed's supposed to work. They have a broad board. They have this somewhat complex structure of governors who are directly appointed by the president, but then Federal Reserve presidents from the individual regional branches of the Fed who are picked by those branches, and then they have to come together and come to a decision. So if there is that sort of robust discussion, that would argue towards Fed independence, potentially. And I think you can actually see that along with that potential for Warsh to be hawkish, the strong bid for the US dollar that's broken out on the idea that Warsh will be the nominee, that speaks to the idea that this is at least going to assuage some of the Fed independence concerns. We've got the famous debasement trade winners, gold and silver, dropping today. Gold at one stage was getting close to testing yesterday's low. In fact, it got within about $10 an ounce of touching the low that it reached yesterday. So that's certainly would seem to speak to the idea that concerns about Fed independence are perhaps a little bit more on the back burner today than they were.
Garfield, thank you so much. Garfield Reynolds there, who leads our MLive coverage over in Sydney for us. Cross-asset move, dollar stronger, equities down. Yield curve is steeper, and we are getting some pressure coming through across risk assets. The initial reaction to the information that the Trump White House is said to be preparing Kevin Warsh for the Fed nomination. Let's get more from our Washington Deputy Bureau Chief, Laura Davison, is with us right now. Laura, thank you for coming and taking the time. What do we know so far about this?
Yes, so we know Trump earlier this evening, this is Thursday evening in the U.S., came out and said he would be making his Fed chair announcement on Friday morning. This is really a long-awaited announcement. He's been, for weeks, debating between about 4 shortlist candidates. The administration is preparing to name Kevin Warsh. He's a former Fed governor, served on the Fed board between 2006 and 2011. He's been long one of the candidates. He was actually originally considered as a potential option for Treasury Secretary back when Trump first came to the White House over a year ago, but decided to pass on being in the running for Treasury Secretary because he more wanted the Fed chair job. It was not clear for much of the process that it would necessarily be Warsh. There were several other candidates, including Kevin Hassett, who's a top economic aide at the White House, Rick Reader, who's an executive at BlackRock, as well as Chris Waller, who's a current Fed governor, who were also interviewed for the job and were in the running.
What then do you think sort of sealed the deal for Kevin Warsh, if indeed he is the one that's nominated? But he's someone who actually has a long-standing relationship to Trump in some ways, given his marriage to Jane Lauder, and she's an heiress of S.A. Lauder, of course, but there's a long-time family friends with the Trumps.
Yeah, it's not exactly clear, what exactly, made Warsh's candidacy stand out. And I'll just note that, people familiar with this matter do caution that nothing is final until Trump announces it publicly. We do know that Warsh was at the White House today, met with various folks there, and so it was clear that, at least he was getting a final look from either the president or his top aides before this announcement comes to pass. As noted, he, has a longstanding familial relationship. He's from, he's married into this wealthy family and has been someone who has been on the president's economic radar for a long time. He, was long time considered to be more of a hawkish personality, looking, when it comes to interest rate policy. Though in recent months he's really changed his tune and has shifted his perspective. Trump has been very clear that he wants someone who will push for faster and deeper interest rate cuts, and Warsh has really embraced that here recently.
Laura, fantastic. Thank you. Laura Davison there, our Washington Deputy Bureau Chief. She's the one of the people, of course, who broke that scoop, of course, that markets are currently reacting to a stronger dollar on your screens. We'll take a short break, and we will see you on the other side of it.
You're watching The China Show, taking a look at US futures this morning. Not surprising, we're seeing them a bit under pressure because you've got actually the yield curve steepening. You've also got the dollar that's gaining today, but it is that big headline and certainly the biggest news story that the Trump administration is said to be preparing Kevin Warsh for the Fed nomination. That announcement should come later Friday in Asia time. President Trump earlier today in Washington saying he'll announce it Friday morning in the US. So we'll leave that there, but let's just talk about Asian equities as well, because they've actually been driving hedge fund performance in the region, propelled by tech. Of course, it remains the most dominant theme for us. But the Eureka Hedge Asian Hedge Fund Index gained 14% last year. That's actually the best result we've had going back to 2020. A Bloomberg report has found, though, that many long-short equity strategies did way better than that, with smaller funds stealing the show.
Yeah, joining us now is hedge fund specialist Gigi Luck, CIO at GGL Capital Investment Group, to help us understand the trends that people are paying attention to. Very nice to see you, and welcome to the show. I think that's the basic question, right? AI needs to be part of your thesis. It's now the how. How do we express that now that AI has done so well?
Yeah, thanks for having me. It is actually a great time to talk about tech, AI,
right.
Especially this one. There are a lot of moving parts and a lot of rotation happening already.
Yeah.
So in AI, I think firstly, we are seeing rotation out of the giant tech names to the more value AI names. And secondly, investors are more selective. They are more cautious on the valuation. They would rather pick the names with high quality, but with reasonable valuation. So what it means is we will continue to see flows into, emerging countries with tech companies such as Korea, Taiwan, and even China and Japan. Going forward.
And is it, what part, I guess, of the tech supply chain, obviously North Asia in particular has a very big semi-focus. Is that still the most dominant theme in tech, or are you looking, I guess, into more emerging areas like ESS, for instance, energy storage systems is shaping up to be sort of adjacent to it, but still very much related to the data center story?
So the Asian countries have their own different landscape and distinct expertise. Say Japan it remains to be a very important part of the supply chain. So they have the equipment, they have the robotics,
and Taiwan, the materials.
Yeah, and then Taiwan they have the foundries. Korea they have the big memory companies. And China, well, it's very diverse. They have e-commerce, they have the advanced manufacturing, EV tech, etc. So, it is, as an investor, we always like to invest in tech, but across all markets, across all subsectors. It's important to understand tech when we do investment in a holistic way.
I mean, manager selection, risking stating the obvious, is obviously very key here to performance, right? And I wonder, since the Chinese markets emerged from a bear market, I would imagine more fund houses have set up shop. How has that dynamic affected your job effectively? What are the trends to watch there?
Well, we are very glad China has come back. As we saw like last year, China rally. It's important to notice that it rallied without the recovery of the property market. So it's a good structural change. It has been supported by consumption, domestic, and then manufacturing, exports. They have very strong exports remaining, continue to have very strong exports. So which is very good news. And we are excited that within the hedge fund landscape, we're seeing more new launches. A lot of the new China funds are coming back.
Okay.
Which is good. We've seen like names from, like they could be like spin out from like pot shops, or they can spin out from existing, big hedge funds.
And what's sort of the most dominant strategy that these new hedge funds are taking?
Yes, a lot of them have. Well, there are two types of funds that we see a lot of new launches are from. One is Asia Pacific, but with a heavy tilt to tech exposures.
Okay.
And another, we continue to see like China funds, but they also play heavily in the tech.
Right.
Yeah.
And I'm curious, so a market like Korea, for example, right? If you did not have exposure to Korea, you'd likely underperform.
Yeah.
But with the gains that we've seen there, more than double, I mean, you could make the argument the next big move could be down. How do we need to be looking at Korea as part of our strategy this year?
Yes, that's a very good question. If we look at Korea, the market rally this month, Samsung and SK Hynix already contributed a lot of it. If you look at these two names, it already make up like 30%, more than 30% of the index. So what's next to play?
Yeah.
Well, actually, for Korea, in addition to tech, there's K Beauty,
right?
K Defense. These names are pretty unique and may not be known by foreigners, but there are a lot of research to be done. But we pick managers who are specialists in this area, so they're able to invest across these different sectors.
Beyond, and just speaking of defence, actually, beyond Asia, what do you think about Europe then? And are you looking for investments there in the coming 12 months? Because, I mean, defence was one of the standout sectors for 2025.
Yes, Europe remains to be a very important market. A lot of headlines, a lot of noises, and we consider any pullback is a good buying opportunity.
Right.
There's always pockets of resilience, defense, and energy. So, and a global defense budget will keep rising. So we consider this is a very good opportunity.
Gigi, thank you so much. Happy Friday.
Happy Friday.
Sorry to keep you waiting. We had some breaking news, but thank you for being patient. Lots more to talk about. I wasn't able to get my question, which was what's the next niche market opportunity? Anyway, Gigi will perhaps be joining us quite soon to talk us through that. CIO there of GGL Capital Investment Group. Okay, markets are looking like this. In case you're just joining us right now, massive news in the last few minutes or so. The Trump White House is said to be preparing Kevin Warsh for the nomination to head the Fed. It's also worth, or equally, if not more important to emphasize, this is not a done deal. This has to go to the Senate, where things could get slightly more complicated as far as the challenges are concerned. What the market is doing with the information so far that we have is they're driving up the dollar, they're steepening the yield curve, and risk assets, as you see on your screens, with the exception of Korea, but Korea is also off highs of the day, selling off risk assets as we speak. Dollar is stronger, 0.4 of 1%. Dollar yen, 0.5% to the upside.
Yeah, but as we said, that it really is the biggest story for markets, that nomination should be coming really within the next, within the next 12 hours or so.
Yeah.
President Trump earlier today in Washington saying he'll announce it Friday morning, U.S. time. So, as you said, we're seeing that market reaction, stronger dollar, rising Treasury yields as well, and markets sort of trying to dissect, is he going to be someone that leads more hawkish, even if he's had more dovish commentary in recent years and has seemed to more align himself with President Trump in terms of arguing that case for lower interest rates. Still, people are going back. What did he say in the period of 2006 to 2011 when he was a Fed governor at that time?
Interesting pick, if that turns out to be the case. And of course, if he does get to eventually lead the Fed, the other angle to that is maybe the markets are interpreting this choice as one that's able to now look at the data more saliently, if you look at it, and one that is starting to show a stronger and more resilient U.S. economy with expectations of a rate cut priced back a little bit, stronger dollars coming through, and of course a steeper yield curve, which is indicative of what we just mentioned there. That's it from us here on the China Show. We will see you all on Monday. Lots more coming through on this top story. Plenty more ahead on Bloomberg Television.